Hello and welcome to a new and special edition of Amundi's Monthly Market Views, where we'll take a moment to look at what happened in 2023 and to analyze the big themes for next year. My name is Giulio Lombardo and I am responsible for digital communication and strategy at the Amundi Investment Institute, and I'm very pleased to welcome Monica Defend, head of the Amundi Investment Institute. Good morning, Monica.
Thank you, Giulio. Good morning.
So Monica, let's dive right in. As we're drawing to the close of 2023, what do you think were the big surprises this year and what instead went according to your expectations?
Well, we've seen some surprises this year. The first in the United States, where economic growth was resilient, supported by private investments and excess consumer savings. And that shaped optimism in the markets, although sometimes excessively. Secondly, as we anticipated, the Fed raised rates this year, leading to tighter financial conditions. This caused unexpected challenges for some mid-sized US banks in March. Regulators eventually handled the situation reasonably well. Third, we thought China's economic reopening would boost growth. However, as the year went on, this was offset by problems in the housing sector and in consumption, and it became clear that China is moving faster than expected towards a lower but more sustainable growth model.
That's very clear, but let's move on to 2024. What do you think will be the big economic and the market themes that investors should pay attention to?
Well, I see three main themes: inflation, economic slowdown, and central bank cuts. Within the Fed and ECB, we start cutting rates towards the end of the second quarter, when they become more confident of their actual progress on inflation. The economic slowdown will be more evident at this time, pushing them towards policy easing. On the economic front, we expect a mild recession in the United States in the first half of the year due to slowing consumption and low growth in Europe. Growth differences across the world will also be more evident as the gap between emerging and developed markets is still high. But this is due to country-specific factors. For instance, we are forecasting strong growth in India, thanks to its large domestic market and favorable demographics. Other countries, for example, in Latin America and in Asia, could benefit from the reallocation of value chains.
And what about on the geopolitical front and the fiscal aspect as well? What should we expect?
Well, with rising deficits and high government debt, the US fiscal capacity is restricted. In Europe, national policies will also be more in focus, while in China as well, we don't expect any big fiscal stimulus. Geopolitics will also be important next year. We start with elections in Taiwan that are relevant for the US-China relationship. We will have then the EU Parliament elections in spring, and we will end with elections in the United States.
So in this overall context, what are your main convictions across the different asset classes as well as markets?
In fixed income, we believe that an economic slowdown and interest rate cuts will support government bonds. But after the recent rally, the approach should be flexible. Secondly, we like a quality corporate credit with a focus on businesses that have low debt and the ability to maintain strong cash flows, but we are cautious on the lower rated segments. In equities, we are slightly cautious overall in developed markets as the market is too optimistic on earnings. Here we also favor select segments like quality and value in the United States and Japan, where valuations are still attractive compared to the expensive sectors like technology. Fourth, given a robust growth environment, emerging market bonds and equities should play an important part in any global portfolio. Emerging market bonds could benefit from a dovish Fed and the prospect of a weaker US dollar. On the other hand, we like stocks in countries like India and Indonesia, thanks to their strong domestic consumption.
Monica, thank you so much for sharing your views with us today.
Thank you, Giulio.
And thank you all for tuning in. We hope you enjoyed this special edition, and we'll see you next month for another Market Review.